Meta just turned its biggest cost into a product. Meta Compute launches, and the stock ripped 10%. Plus, 4 more stories moving the AI tape today. Let's get into it. Meta is launching Meta Compute, a cloud business to rent out the AI chips and models it isn't using internally, and Wall Street rewarded it with a 10% pop. Meta's best session in months. Bloomberg broke the story July 1st. It's the SpaceX Colossus playbook. Monetize an overbuilt data center footprint. The reframe is everything. Meta's $115 to $135 billion 2026 capex just went from pure cost sink to a potential revenue line, in a market where even Google is capping partner compute. Supply is the scarce asset, and Meta just became the 4th credible hyperscale seller. The bear case. This is a slide announcement, not a signed customer. Renting excess capacity is lower margin than AWS-grade cloud, and Meta has no enterprise sales muscle. The forward signal. If Meta attaches revenue guidance to compute on its next print, the re-rating sticks. Silence, and today's pop fades. The Philadelphia Semiconductor Index just posted its best quarter on record, up 87.8%, the biggest since data began in 1994, and traders sold the winners on day 1 of Q3. Micron fell 10%, SanDisk fell 10%, the Nasdaq slipped to 26,040. But context matters. Micron is still up 260% year-to-date. SanDisk up 750. This is profit-taking, not a thesis break. And notice the rotation. While semis bled, Meta popped 9, Microsoft 3, Apple 2. Capital is moving out of chips and into the hyperscaler platforms, exactly the Meta Compute trade we just covered. The bear case. The infra cost versus margins worry is real, and Nvidia near 197 is down 7% on the month. The forward signal. If memory names hold their gains into next week, this was healthy rotation. If the selling broadens to Nvidia and Broadcom, the AI trade is derating for real. Anthropic shipped Claude Sonnet on June 30th, its most agentic mid-tier model yet, and made it the default for free and pro users. The pitch aims straight at the efficiency reckoning, near OPUS performance on planning, tool use, and coding at a fraction of the price. Introductory pricing is $2 and $10 per million input and output tokens through August 31st, then 3 and 15, well below OPUS tier economics. It ships with a native 1 million token context and is now the default in Claude Code. This is Anthropic pressing its enterprise and coding lead just as buyers pivot from token maxing to ROI. The bear case. Cheaper flagship class models compress Anthropic's own revenue per token, and OpenAI and Google can answer on price. The forward signal. Watch developer adoption in Claude Code. If agentic coding share climbs through August, the cheap Sonnet bet is working. If it cannibalizes OPUS, margins take the hit. Abu Dhabi's MGX just closed its first fund at $49 billion, blowing past a $45 billion target, and instantly becoming one of the largest pools of AI capital on Earth. The 2-year-old Emirati firm is already a backer of OpenAI and Anthropic, and now has the firepower to anchor mega rounds, compute buildouts, and M&A across the stack. This matters because it adds a deep-pocketed buyer right as compute becomes the sector's scarcest asset. The same scarcity driving the Meta Compute launch and Google's partner caps. Gulf sovereign capital is now a structural force in AI valuations, not a sidecar. The bear case, $49 billion of concentrated price-insensitive money, is exactly what inflates late-stage rounds past rationality. MGX could be underwriting the top. The forward signal. Watch which mega round MGX anchors next. A fresh OpenAI or Anthropic tranche at a stepped-up valuation tells you the funding cycle is still red hot. South Korea unveiled an $880 billion 10-year plan for semiconductors, AI, and robotics on June 30th, the largest national chip investment on record, with President Lee framing it as a matter of national survival. Samsung and SK Hynix anchor about $518 billion of it, including 2 new fabs each in the Gwangju region. For the memory and HBM supply chain that feeds every AI data center, this cements Korea at the center of the compute build-out. It lands the same week TSMC's advanced packaging fabs report 52 to 78-week lead times. Capacity is the bottleneck, and Korea is spending to own it. The bear case: this is a 10-year political pledge, not committed capex, and fab plans slip. The forward signal: watch Samsung and SK Hynix HBM4 capacity guidance. If the fab clusters translate into firm 2027 output commitments, the memory supercycle that ran Micron up 260% has a longer runway. The through line today: compute is the scarcest asset in tech, and everyone, Meta, MGX, Seoul, is racing to own it or sell it. The chip pullback is noise against that build-out. For the daily read on where AI capital is really flowing, subscribe. This is the Daily Alpha.